everyone. Welcome to another diary session. This is my immigrant diary. My name is Precious.
And my name is Wale. Today we're going to be talking about three main habits of credit card users. Number one is make sure you don't apply for multiple credit cards at the same time. When you're just starting out on your credit card journey, like you want to start out with starter cards or cards that at least they don't charge you an annual fee. But if you can get like cards that will give you sign up bonuses, that would be great. An example of the card that we recommend, although we are not sponsored by, is the Discover card. We have a video of how you can get that a Discover card when you just move to the United States. We'll share the link below. Please check it out. So when you get a starter card like that, you start to build your credit card, and after some time, when you've grown in your journey, you are going to want to add to that credit card or even add multiple cards to that credit card. The benefit of that is that like once you have like multiple credit cards, then you're going to start having like multiple trading lines that the credit card bureau is basically going to see and see that fine you manage multiple credit cards, and then you're using your multiple cards well, and then your points, rather your credit card score can grow a lot faster than just when you're working with one credit card. Now the temptation is that you know that this works for you to have multiple credit cards. You want to apply for multiple so that you will be able to get as you'll be able to grow your credit score as quickly as possible. But the problem with that is that once you start applying for multiple credit cards, especially within a short period of time, lenders are going to think that you have a problem with your finances. For example, maybe you need some money, basically you don't have any money in your account again, and you are irresponsible with what you're earning already. So once that records start hitting your credit score, or even the application, because credit cards, the lenders, they have to do a hard pull on your credit score. Once those things start hitting your credit report, it's going to start dropping your credit card score like crazy. So you totally want to avoid that. For me, I had I would say an unexpected experience with it, because I knew that before I moved to the United States that you shouldn't apply for multiple credit cards, but I wanted to, regardless, I accidentally applied for multiple credit cards at the same time. I applied for three cards within a month or so, or a month or less. First card was a card I had always wanted to get. It's a Capital One Quicksilver. So I wanted to get that card as a beginner card, just to pair it with my Discover card so that I can of course use it to build my credit score. So I applied for it earlier in the year. I did not get it, and then eventually, I think around November or December, they basically invited me to come and apply. Once they send you an invite, like, you're more than likely to get the card. So I applied. After the invite, I was approved. That was good. So the next one was I wanted to apply for. I wanted to get a new phone, and Google was basically doing a promotion where you could buy a phone on loan rather. You could buy a phone on loan without paying interest on it. So I'm like, this sounds good. So I basically applied for that. So I'd rather just use the money now and then pay Google over like 12 months, 24 months, wherever, without interest. And I'll be able to use the money for other things that I need to use it for. So a win-win. And so I applied for that loan, and I thought it was going to be a different kind of loan. The credit cards are categorized as revolving loans. There's a different term of loan for when you apply for like personal loans or something stuff like that. I thought it was going to be a personal loan, uh, and so it was, but it was not. It was basically a credit that was issued to me. So that basically recorded on my credit report as me applying for a credit card. That was the second credit card that I got. The third one that I applied for within the same time frame was basically a secured credit card. So all this time while I was applying, like these scores were not really hitting my account like that. So because like it takes a while before the lenders will send the reports to credit bureaus, and then they'll make deductions from your account. So for this card, I basically had an account, a bank account that was offering a credit card, a secured credit card after I met some conditions, and so I did that. And for me, again, the goal was that I needed like a different kind of credit card for a specific purpose. So because I have like a store that I shop with regularly, and they accept that kind of credit card. So I wanted that kind of credit card that I could use it for that store. So I applied for that. It was issued to me, and once I added it to my and also another thing that I also didn't really understand about secured card was they did say that they weren't going to report like credit utilization, but when the credit report of that card was recorded on my general credit report, basically it still indicated that I had used part of my credits, which wasn't that high at this point anyway. So I was really confused, and I was very annoyed because the money that was indicated that I had used was basically money that I put there. So I'm like, why just why is it? I just didn't understand how to get card works. So I decided to basically just and yeah, and that was the third. After that third hit, my score dropped by about 80 points in total, and it's really hard to build points. You have to build. If you're gonna build like 80 points, it takes you months and months and months before you get there. Even sometimes 1 year, 2 years for some people. So for me to like lose 80 points for my total credit score, it was extremely annoying. So I was upset, and I just canceled the secure credit card immediately. So that's something you don't want to fall into. Like, be careful when you're applying for credits or for loans or things like that. And if you understand exactly what you're doing, you'll be able to make good use of your of the loans or money that is available to you for you to be able to build your credit. Yeah,
I think you have. I think you have a valid point, Wale. Because I remember if you have been following our channel, you would notice I mentioned when I started my journey, the first place I applied for a credit card was a secure credit card with the old generation bank that I opened an account with. And I remember that I had no idea, Wale, about what you just said, that they did a hard pull on my credit. And this was me fresh in the US, no credit history, right? Nothing. They did an hard pull. Now I didn't know all of this, right? Just like you mentioned. But when you and I discussed and I applied and got the Discover card, which is the card that I'm using currently to try and build my credit score. And if you find our video, it's a fantastic opportunity because right from the first month, I was already at over 700 credit score. But when I finally signed up for Credit Karma, which is the app to help check credit score and just to manage and monitor our usage. If you're following us as well, we'll drop a link in the description so you can also watch the video on that we made on Credit Karma. Guess what? When I looked at my account on Credit Karma, it says there has been one hard pull on my credit. Now I'm wondering, one hard pull. When I checked it, it was this bank, right? They did one on me. I'm like, come on. And I didn't even get the card. You get so upsetting because I did not get the card, just like you ended up canceling the secure card because you kind of it's just upsetting, really. Yeah. So I think as a result, it was back to back because that happened a month prior to when I applied for Discovery card. So I decided to go a different route. The goal is, just as Wale has shared, for us to share our experiences and also experiment. Yeah. So I decided not to apply for a second card, even though it is the general opinion is for you to get at least 2 to 3 cards at, if you're just trying to build your points, your credit score, you want to start with, 2 to 3 cards, really, because easy to manage, easy to track, easy to know what is assigned to what, easy to take advantage of the rewards that, you can accrue, easy to take advantage of points, and easy to, track majorly. But like Wally said, if you go ahead and apply for too many cards within a short period, just from his experience, it can hit you negatively in a way that will take you some time to really bounce back. And so that is one of the 3 main habits for every credit card user.
And we are going to go to number 2. Spend below 30% of your credit limits. Now, this, now this is very interesting. This is one of the things that, like, it can be confusing at times, because, like, why would someone give you credit and they don't want you to use it? And so, but my guess is that, like, I'm not sure about this because I was discussing this with Precious a while ago. My guess is that it's going to be based on data points, that if you spend like above 30%, then you're probably not going to be reliable with repaying your debts. And that's my best guess. That's why the industry just now agrees on 30% is something that will be ideal for you to get like a good credit score. So there are videos online of people who basically experimented with it just to show how negative of an impact it can be on your score. You can look it up, but like we are not going to experiment with that now. So sorry.
I'm not. We're not going to experiment. We're going to take some of the information that is available and share and also apply. So just like Wale has said, we are in the safe zone. So far, I have not. I think there was just 1 month that I spent a little bit above 30%, or like 32, 31. It's negligible, maybe. But, stay safe, right? Stay safe.
Yeah.
Because also, Wale, like you mentioned in one of the points you made, it would show the level of your discipline, right? Whether you're reliable with how you manage money, whether you're in crisis, whether something of that nature. So it's important to really stay below 30%, even though generally there is no known fact, across the web, in all the research I've done, there's no known fact of why we are all advised to stay below 30%. But it is, it's what is the norm. It is what it is. It's the norm. So don't try to change it. Don't try to prove otherwise. Don't try to find out, right? Stay within it, stay below it. I endeavor to do that. And there's also, the advice, that if you consistently stay below 30%, it will help improve and boost your score. And also it will help impact the utilization ratio, really. At the end of the day, that is a fact. It will impact the utilization ratio positively.
Yeah. I do have for another funny story, another accidental story, just like the first one. This has helped me to really improve and be a lot more disciplined with my credit card. Where it's actually occurred when I still had one credit card, and I basically I was using the card. I was staying below 30%. Sometimes if I go above 30% a little bit, I'll pay it off as quickly as possible. I think maybe after like 2 months or so like that, I got really comfortable with it. And then maybe after 2 or 3 months, I don't know. But like I went above 30% at some point. So there's a due date that you have to pay off the money. So for me, I already have like automatic payments set up on my account.
Okay, that's good.
On the due dates. So I was generally comfortable. I was like, oh, the due date is gonna come soon, and I can either automatically pay it off, or I'll just pay it off myself. So, but before the due date came, I think a couple of days before the due date, I paid it off, so I was fine. And then the next, when my next credit score was going to be calculated, it was calculated that I had gone above 30%, I had gone up,
Wow.
so it was at 30, were recorded at 32%, and that dropped my
Wow.
I think by like 10 or 15 points, if I remember correctly.
Wow.
And so that was extremely annoying. I'm like, but I paid. Like, what happened? Like, I
Yeah.
didn't see anything.
That's the feeling like, but
Yeah,
I paid. I paid.
yeah.
Wow.
So
Wow.
when I saw that, I
Wow.
decided that's when I adopted the principle that I'm not going to spend beyond 10%. So for me, just to be safe, so that I don't hit that threshold, once I hit 10%, I'm going to be extra alert. So of course, I still go beyond 10%. Well, but at 10%, I try to pay everything off at once. But there are some purchases that will still go up, because once you have like a low credit limit, at the time I had like 1,000 credit limits, 30% is 300 bucks. There are some purchases that will go like 150, 200, whatever. So, but once I hit those purchases, I just pay them off as quickly as possible. But come to find out much later, I didn't know this until maybe sometime this year, or like a few months ago. Months after like that incident that happened, there are two significant dates when it comes to payments. One is the due date, which everyone will be aware of. It's going to be obvious on your account, and that's the one I was using. But there's another one called the statement close date. The statement close date is the date that the lender is going to send your information, your credit information, to the credit bureaus, and they don't need to alert you about that statement close date. So what actually they do send you the monthly statements to let you know when it's going to be due, but they don't need to tell you when they are sending that information to the credit bureau. So it's up to you to monitor, to be aware of that statement close date. The statement close date is what determined that my credit had gone beyond 32%, and I was waiting for the due dates. So even though my strategy of so there are two things that really started helping me since then. I kept my payments below 10%, so I never hit that 30% again. And plus, now that I'm aware of the statement close dates, I'm even more empowered to be able to be strategic with my spending, my payment, and everything. So keeping it below 30% still, below 10%. So right now, let's say if I have like 10,000 credit limits, my payment will never exceed 1,000. If I have $1,000 credit limit, my expenses rather should I exceed 100, and I should be around that 100 bucks. So basically, so that's one thing. And then plus the fact that now that I'm aware of the statement close dates, I'm a lot more empowered to be able to build my credit a lot better and a lot faster.
Awesome, Wale. Thanks for sharing that. From what you said, which brings us to the last point.
Yes.
Pay up your balance in full.
Yes. Pay on
Okay.
time and in
Pay on time and in full, rather. Pay on time and in full, right? And that cannot be overemphasized, because the minute you miss a payment, it impacts your credit score. ASAP. There is no getting out of it. It impacts your credit score, and you don't want that to happen. And paying up in full helps prevent you from paying interest. Now, there's a minimum balance you can pay that you're most required to pay, actually. And you can go ahead and make that payment, but the best advice in the ecosystem is pay up in full, so that you don't have to incur any interest, in the process.
Yes.
Right, Wale?
Yes. So like the with credit card, you really want to be careful, because there's yes, it's one of the best tools for building credits. But like, it's also, you don't need to lose value. You don't need to lose money on credit cards.
Yeah.
So you can be one of the best tools for either saving money or even making money on the side. Basically offsetting a lot of other payments that you might have to pay. And so when you start with the habit of paying interest, that you are only paying the minimum required, you are not paying the full, your interest basically eats into the value that you otherwise get from the credit card. So you'll be losing the value from the credit card, plus you'll be owing more money on the credit card. That doesn't affect your credit score. As long as you pay the minimum balance, you're fine. But like, it definitely affects the amount of value that you can pull out of the credit card. So for example, if I was going to be holding some minimum balance on my debit card or my discovered card, I at least I've spent over $1,000 on that card by now, and interest is around 20 something percent. If I'm going to be paying over $200 in interest, or even possibly 250 or something like that, the bonus that I got I got a cash back of around 100 and a bonus of around 100 from it, so about 200. So basically, if I was paying interest, that cancels out my interest. So there's no there's no value for me there. Plus, if I
Yeah.
owe more money, then I'll be paying much more money than I did. So you want to pay on time, you want to pay in full. So that's why I have automatic payment set up on my accounts, on all of my credit accounts. So that worst case scenario, if I forget, but although generally I tend to just go into those accounts, pay those money. For me, I also like to go into those accounts to monitor those accounts, but that's another that story. But like the most, so when I go in, I just manually click on the payment and it's done. But even if I forget, and sometimes I have forgotten, the automatic payment kicks in and my payment is done. I don't have to worry about it. So yeah, so that those are the three main things that we can talk about today. If you get to do these three things, you'll be well off on your credit card journey, and you'll be surprised how fast and how quick you can grow on your credit card journey. And right now, like Precious said, he's at 700. I'm also
Yeah.
going by my 700s. Interestingly, like, although I didn't get a lot of points, because of
Well,
just
you're
like
back on track. You're back on track. So
exactly.
that this leads me to a bonus point, a bonus habit, right? This is bonus, which is if you make an error, fix it,
Yeah.
right? If you made an error, fix it. So what I mean by this is, like Wale has shared, and also for anyone listening, if you find yourself in a situation where you spend more than 30%, you didn't pay on time, you have applied for too many credit cards, it's negatively impacted your credit score, fix it, right? Come up with a strategy, come up with a plan, make your payments on time, and fix it. Wale shared about how his credit score is beginning to bounce back. Same thing. Don't wallow in self-pity. It doesn't achieve anything. Don't wallow in worry or feeling sad for yourself. Look at your numbers, look at your finances, and fix the error, right? And the interesting thing is, it can be fixed. There are so many gurus out there sharing strategies of how you can fix your bad credit. There are strategies of fixing it. But for those who are just starting off, like myself and Wale, and you are not in a really bad situation, which is why I used the word error. Maybe there was an error, like you did pay on time, you didn't realize the date, you spent maybe a little above 30%, you kind of applied for too many cards within a short period. All of the other things that can impact your score negatively, but not like that. It's not detrimental. You can fix it. Okay.
Exactly.
So that will be the bonus point in view of this discussion. Thank you, Wale. It's been an awesome time, an amazing time just listening to you share a lot about your experiences. Not very, very experienced in this area yet. I'm playing it very safe because I want to be able to also share being safe, right? I have my one discover card. I'm going to wait up for 6 months, then apply for the next card, and just share that journey, as well, so that we have, more than one data point
Yes.
about, the habits required for having good credit score, maintaining good credit score.
Yeah, absolutely. Thank you so much for being with me, my brother. Like, it's always great speaking with you. And so we wish
Awesome.
everyone a wonderful day. We'll see you in the next video. And just one thing before I forget, like this is not financial advice again. We are not professionals. We're just sharing our experience with you as we are going on our credit card journey. Like and subscribe. If you're also willing, please share the videos with your friends and family. Help us grow this channel. Thank you so much. Have a wonderful day.